Hello, traders. It's Wednesday, July 12th. We're about 90 minutes after the open. We had the CPI before the open today. Came in a little bit lighter than expected. S&P 500 up 25 points after the announcement, making a new relative high. So we're going to cover all that in just a minute. We start all these videos with a review of our previous pick, then we do market analysis, and then we look for a new pick. The last pick that I had was ALB, and I posted that video Sunday evening. I had mentioned to you that this is a choppy stock and that this is a choppy market. So we're going to use a tactic and we are going to buy dips. So let's take a look at that daily chart and see why I liked it. And here you can see that the stock has a really nice breakout. So today's Wednesday. This was the breakout right here on Sunday, but we were not going to simply rush in and buy this because you can see the stock has been up and down and up and down. Yes, the trend is higher, but you can see that there are plenty of dips that can be bought. Well, the same is true on a 5-minute basis. So if we look at that 5-minute chart, you can see this stock has lots of peaks and valleys, so we do not need to rush in and buy it. What we want to do is when we get a nice big dip like this is where we want to be buyers, and then you get the release. So even though the stock has been in a choppy uptrend, we buy these dips, we sell these rips and take profits, and then we wait for the next one to surface, and we repeat the process. So the keys to this entry were that we were going to wait for LRSI and relative strength, strength versus the S&P 500. That's OneOSI as we call it. This orange line here, we're waiting for it to dip below zero and then for it to go positive. We're also waiting for LRSI to go below zero and then, below 20 and then for it to pop back above 20. Well, that's exactly what happened here. And this is just a little touch and go. So I'm going to say, all right, well, maybe that wasn't quite legitimate because it didn't spend time there and because the video had just come out. So this is the price action Monday. We would have gotten the alert right away Monday. Wow, that ended up being a nice alert if you took it because the stock went from basically $238 to a gap up of about $248 the next day. These are the types of moves that this stock makes. You can see if you didn't take your gains, well, look, they all vaporized. Stock pulled back again. And now you can see for sure yesterday, near the close, you would have been buying this stock because you had your cross back above zero, indicating relative strength, and you had your cross back above 20. So there is your condition. And the stock closing at about 238.50. And today the stock is trading up to $246. So an $8 winner. Yeah, I'd probably be taking gains near that relative high, but we have a strong market, so you might as well let it run a little bit. There's no reason to take gains just yet. Let's see how the day plays out, which incidentally, the day is shaping up to be pretty decent. These alerts are easy to set. I'm going to show you how to do it. I just right click, create alert. I'm going to use strong versus the S&P 500. I'll go into a M30 time frame. Why do I use an M30 time frame? Which, by the way, it's above zero right now. So when I add that, I need the condition to go false and then true. And I'm going to save that, and now I'll get another alert when that condition is met. In the previous video, I showed you how to use both of these indicators to set that alert so I can have both relative strength and LRSI working at the same time. The key point here is that the market is in a choppy trend higher. It's not in go-go, stack a bunch of green consecutive candles on heavy volume mode. So we do not need to chase anything. We need to find those strong stocks. We need to wait for the pullback. Then we buy on that pullback. And when we get the next rally up, we look for that move to stall and then we take gains. That's the trading mode that we're currently in right now. So let's take a look at the market and see what it's doing. We've got this big gap up on the CPI number. A couple of things to keep in mind with this. First, we'll go into that daily chart and see how this impacts the longer term picture. We have a bit of a cup and handle formation here. Typically on a cup and handle, you want to have half of this distance from the previous high and low preserved, which we did approximately. Now that's the lip, and there's our breakout. So this is a cup and handle formation. I don't pay a ton of attention to these formations. What I do pay attention to is that when we have a gap up to a new relative high, sometimes those moves hold, sometimes they don't. We need to be very, very cautious. In this case, we had a little bit of a compression here, and then we had a gap up. Well, that gap up actually held and the market moved higher. But if we take a look back at the daily chart, we can see many instances where we had gap reversals off of those new relative highs. Well, how do we know that? We know that because a red candle is left on the chart. There's a gap up to a new relative high and a red candle. There's a gap up to a new relative high and a red candle. There's a gap up to a new relative high and a red candle, red candle, red candle. Bearish hammer here. So market opens here, tries to move higher and closes on its low with follow through selling the next day. So the point is that from a trading standpoint, and this is really important to understand, most novice traders are going to see this gap breakout and they are going to come in and they're going to get super, super excited. Market's been in a trading range, hasn't done really much of anything, fairly light volume. Inflation's been in focus. It came in lighter than expected. Here's the gap up. Ooh, 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 I got to rush in and I got to buy right now. Well, these gap ups, oftentimes you're going to get maybe a couple of little green candles and then long red candle, long red candle, long red candle as those bullish speculators get flushed out. You see a lot of selling pressure, that gap fills, and sometimes those even turn into bearish trend days. So when you have a gap up, the nice thing is that we've got the longer term trend working in our favor on the gap up. So our best case scenario today, and we didn't get it, would have been kind of a little wimpy gap fill with mixed overlapping candles and light volume that finds support before the midpoint of this gap is filled. And if we go to the daily chart, we would like to see that previous resistance level, which comes in around 444. We wanted to see that preserved. If that happened, then that little dip that we had on the open would give us time to evaluate stocks. We'd be able to find the real McCoys that are still continuing to grind higher because all the stocks are going to gap up with the market. But not all of them are going to preserve their bid because some of them are fakes and they're just moving higher with the market. So a tiny little pullback like this on the open would have given us ample opportunity to find the stocks that are ticking higher, and it would have given us the information that we needed to know that this is not going to be a big gap reversal or a bearish trend day. Information. That's really the key. So what information did we have after the first hour of trading or so? Well, we had a gradual drift higher. These tiny bodied candles tell me that there are sellers. So they are keeping a lid on the market right now. But what I'm also seeing is that this gap up has been preserved. So the normal temptation to take profits, take profits, take profits, all of that selling pressure has been offset by buyers. So buyers have been able to preserve this gap. That tells you that they are engaged, but they also are not able to drive the market higher. So there is still some selling pressure. Once we get through the first hour of trading in the absence of any long stacked red candles, then we can be fairly confident that we're not going to see a gap reversal. So now you start getting into the mode of, hey, we've got heavy volume. We've been able to preserve the open. The market's been able to float higher. This is demonstrating that buyers are engaged and buyers are interested right now. So we get this bearish 10P cross. This is an indicator unique to Option Stalker and Option Stalker Pro. And you start seeing the first part of this bearish cycle, and we are compressing near the high of the day. That tells you that this cycle is benign. We would normally start to see a lot of market retracement when we get this bearish cross, but the fact that we've been able to preserve the market gains and that we haven't seen any long red candles yet tells us that, yeah, the coast is not quite clear yet, but we can start to get a little bit more bullish. So you continue to wait, you continue to see what this bearish cycle produces. If you start getting long red candles and you take out the low of the day and you get into this gap, then you have to be concerned. So right now, you can continue to wait for this to come in. If you've got a really, really strong stock that you've been able to find, you could probably start nibbling in here with the expectation that you're going to get a long breakout candle in here, and then you'll be able to add to the position. So that's kind of the mindset that I'm in right now. I'm going to be looking for bullish stocks. We have a nice breakout. Market's been able to preserve those gains so far. Let's talk just a little bit about inflation and kind of what's coming up and what the mentality is right now. So core inflation has been very, very stubborn, and it is not coming down. And it probably won't come down very quickly this year. And that's really what the Fed is paying the most attention to. The likelihood of a Fed rate hike in 2 weeks, the FOMC statement's going to be in 2 weeks. And the probability of a 25 basis point rate hike is still above 85%. So the CPI number today reduced that just a little bit. It was at 88%. Very, very likely that we're going to see a 25 basis point rate hike. So this great CPI and this big rally that we saw today really hasn't changed what the Fed is likely to do in 2 weeks. We also know that there is typically some selling pressure at a new relative high. We know that sellers have been engaged along with buyers. That's why we've been trapped into this trading range. So I don't feel that we're in go-go mode right now, but I am bullish. That's where the longer term market trend has been. So if I can find stocks that have been also very, very bullish, that have nice technical breakouts on a D1 basis, that have heavy volume, they're through trend lines and moving averages, well, those stocks are going to hold up well relative to the market. So even if I do have some market weakness in here, by being in the right stocks, I can weather that storm because I know that buyers are in there. So when the market goes down and the stock stays flat or it goes higher, that is the tell for me that institutions are in there buying. They don't care about this short-term little market dip. They are looking a year out. They're looking 2 years out. They want to own this stock. And that's the tell. 75% of all stocks follow the market. When they don't follow the market, there's valuable information in that. And so if I do have a market drop and I'm in those very strongest stocks that I know institutions are accumulating, they're going to weather the storm. They're going to hold up very, very well. Oftentimes, even if the market goes down, the stock is still going to continue to march higher. That's the beauty of trading relative strength. It gives us that added cushion. If I'm long the S&P futures and the market bottom drops out, I'm going to lose money. That's how it works. But if I'm in the right stock, there's a good chance that I'll be able to scratch the trade, exit, revamp my market opinion, take in that new information. There's a chance I can even make money on that. You don't have that when you trade the S&P 500, and that is why all of my videos are so stock centric. There's a huge edge for us to trading stock. So that's what we're going to do. We have a nice breakout on a D1 chart. We've got this cup and handle formation. We have a longer term upward trend line that is still intact. As long as this upward trend line is still intact, I am not even contemplating shorts. I don't need to. I'll be trading against the longer term market trend. So let's take a look and let's see what we can find on the long side. And we'll go into a couple of searches here and we're just going to flip some charts. And by the way, I don't have to buy the stock right away. And what you'll see here is I've got trend lines. We have automated trend lines that are drawn on the chart. We have a VWAP E. This anchors the VWAP to the earnings announcement date. You'll see 1, 2, and 3 standard deviation dotted lines on my chart. I can take that off until we really zero in on a stock, and then it won't obscure the chart as much. So let me do that right now. I'm just going to take these lines off. And I can even take off some of the trend lines until we find something that we really like, and then we can put those back up. And the moving averages are always nice to have, so let's add those. All right, now we kind of have our market bearing, so let's flip through some stocks. I'm going to use green royal flush as the search right now, and I'm going to be looking for stocks that have been able to gap up and continue to drift higher, even though the market has this little pullback, or they're preserving their high. That tells me they want to go. I'm going to be looking for good volume. We have good volume today on this market rally. This is a nice little pullback in here. I bet this is going to attract some shorts. We're still way above the VWAP. We're still above that low. And I believe that this little bit of selling in here could prompt a nice long green candle to a new high of the day. The fact that we've been able to preserve all of these gains, the fact that we haven't seen any long red candles to this point, gives me a fair amount of confidence that the market is going to continue to float higher today. May not be a gangbuster move higher because this is already a decent gain, but just a gradual float higher. Well, that's good information for me because then I can have confidence buying really strong stocks. I don't have to worry about the market bottom falling out when I'm in the trade, at least not for today. So we've got AVGO, and right now we can see that that stock's trying to get through this horizontal resistance. Looks pretty good. I like this little breakout right here. I'd like to see some heavy volume. And you can see it's a little bit choppy. Well, that's what the stock does. I mean, look at these candles in here. You can see this is not a stock that makes a straight move higher. And so it is the type of stock that we would want to use. Maybe LRSI below 20 and then above 20. You get your signal in here. Hello. LRSI below 20, then above 20 right in here. Hello. That's how we need to be trading it right now, especially when you have a choppy, chunky stock like that. There's no reason to chase anything like this. So AVGO, it's nice. Yes, I could use that strategy. Maybe I'd use a 30-minute basis for the relative strength and relative weakness. Here's another classic example. And I have an alert set on this, and I might get that alert during this video. NVIDIA, I like it. You know what? I liked it in here when I started seeing it stack these green candles. Did I buy early in the day? No, I did not. I set my alerts because I didn't know what the market would do. Well, now I've got a fair amount of market confidence and I'm waiting for this stock to trigger those alerts. You can see that the stock did pull back, so this was not the best entry to just rush in and buy it early today. D1 chart, nice, trying to get through this tiny little resistance level, and so far it's been able to do that. But yes, Nvidia is nice. It's had quite a big run. So yes, I like it today. I would definitely day trade it on the long side. Meta, oh yeah, I like this. Now this is a upward sloping high plus trend line that comes into play here. It's been able to break out above it. It's been able to hold that 20-day moving average beautifully. It's got relative strength. It's got some decent volume. So let's go in and take a look at the 5-minute chart. All right, there you had a negative value. Actually, it was just positive. So you wouldn't have been triggered right here, but you might still be triggered on a 5-minute basis getting long Meta. This is one of those stocks that you have to really like because it's been able to continue to grind higher even during this market pullback. It pulled back quickly, but now it's rebounding. You can see how the market is bouncing in here. I'm looking for that green candle through the high during this video. I believe we're going to get it. So we're going to continue to take a look. This is what I want right here. Home Depot. Tick, 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 tick. Higher. No, that's not a bomb that's ready to go off. This stock is ticking higher when the market has pulled back. Let's take a look at that D1 chart, see what it's got going. Oh yeah, that is a nice breakout. Let's see if we've got any trend line breaches. We're above all the major moving averages. We've got a breakout above this horizontal resistance point. This stock is choppy, very choppy. If I'm day trading it though, and I feel that the market's going to make a new relative high, I would not have any problem buying that stock right here, right now. So we'll see if we've got any trend lines coming into play. Whoops, sorry, wrong one. And there you can see we've got a really nice breakout here. We've got a couple of high plus breakouts right in here, one to that point and one to that point. So this is really nice. Let's zoom out and see on a longer term basis where that trend line comes into play. That is a fairly long term trend line that dates back to February 2nd. Yeah, that's significant. I like it. So these automated trend lines are another visual aid for us. And we can see that Home Depot has been able to grind, grind, grind higher throughout the course of the day on what? On heavy volume. We have a D1 heavy volume breakout. We have the stock above all the major moving averages. We have the stock breaking through longer term trend lines. Let's take a look at one more thing. This is another study that's been recently added, and you can see that the earnings announcement was way back here. So the stock has been able to rally nicely since the earnings announcement. It's going to be above AVWAP-E. I know it's going to be above that level. We can add it just for the heck of it. You can see where it comes into play. But yes, we're going to be well above even the third standard deviation. So it's very, very strong. It's been able to continue to march higher. So I like the stock. I think it's going to be a good long to have in here. I like the breakout. So how would I play this on a longer term basis? How would I play it on a short term basis? On a short term basis, right now, I would be taking a small position and waiting, just a starter position, waiting for OneOp to get below zero and then to cross back above zero. And when that happens, I want to see a new high of the day. Then I would add as long as Home Depot is continuing to inch higher. That's how I would be day trading it. When I get that breakout, what would I expect the market to do on a day like this, given the current price action? Well, we know that buyers are interested. They've been able to preserve this move higher so far today, and we've got a nice legitimate breakout. So the chances for us to float higher are quite high. But we can see from these tiny bodied candles that there are sellers. There is some selling pressure. So the pattern that I'm looking for is long green candle through the high of the day, and then compress, 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 compress. And the profit takers and the sellers are going to see that they can't drive the market down and that the bid is fairly strong. And then they'll start lifting some of their offers. They'll remove some of their offers. And then, boom, you'll get another long green candle, compress, 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 long green candle. So it's kind of a stair step move higher. I am not expecting an explosive rally today. I think this is going to be a gradual drift higher, more of a seller's boycott than anything. So, in that context, I buy a little Home Depot now. I like the price action. When we get that long green candle, the stock is going to pop. As soon as we get through this high in here, I'm going to be adding to the position. I'd like to see this bullish 1OP cross on a 5-minute basis. Then I can add and add to the position. I like it. So how do I handle this stock on a D1 basis or on a swing trading basis? Well, I want to make sure that this relative high right here is preserved, and that's right around the $315 level. And so what I would do in this particular instance is I would start setting some alerts. So I'm going to right click, and let's get rid of some of these trend lines. We don't need to obscure the chart, so we'll get those out of the way. We can even get the major moving averages out of the way. So we know the basic levels that we're going to be looking for. I want this preserved. I don't want to see the stock go through one of these herky-jerky moves. And this is a kind of a classic example. Ooh, 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 nice breakout. Look at that, stack green candle, stack green candle. I'm going to load up on Home Depot right in here because this is a beautiful breakout. Uh-oh. Uh-oh. Dang it. Now the breakout failed. Now I got to take a loss. Oh, I just can't figure this trading crap out. I'm done. That's not the approach you should be using. You should recognize this is a choppy stock. This breakout, as good as it looks right now, today, yeah, I would trade the heck out of it today on a day trading basis. On a swing trading basis, I want a pullback. I want to see what the stock does in a case like this. And then if it pulls back like that, then I can evaluate how far it retraced. Did it give up the open of that long green candle? I don't really want to see that. What I'd like to see on any kind of pullback from here is that the open of this long green candle is preserved. It can pull back to the halfway point of this long green candle, and it can do that, and I'll still have LRSI on an M30 basis preserved with that 20 cross, and I will have relative strength, 10SI, pulling back on a 30-minute basis. So let's take a look at that, and let's set that alert. So what I'm wanting is for a little bit of a pullback, and here you can see, this is a pullback, and you can see how 10SI goes below zero, and then it recovers. Well, this is what I'm looking for. You can see how LRSI 30 pulls back below 20, and then it recovers. Well, when I have both of these conditions met right in here, hello, that is a nice rally. I'll be waiting for both of those conditions to happen, and I'll be waiting for that support right here at the open to be preserved. If I get all of these, then I have an excellent entry point. And then I'm going to be doing my next video, and then I'm going to be telling you exactly the instructions that I just gave you, and we're going to be looking at another winning trade. So right click, Option Stalker Pro, create alert, strength versus SPY, M30 basis. Let's add that, and we're currently above zero, so it needs to go false and then true. LRSI, select that, M30 basis, set this parameter for 20 because we want the stock and the indicator to go below 20, and then we want it to rise above 20. So I'm going to add this, but it is currently above 20. So it needs to go false and then true. I save it, and now I don't have to do another thing with Home Depot on a swing trading basis. When I get the alert, I have an opportunity to evaluate the price movement, and in this case, I want to make sure that the open from today is preserved. Any retracement that still preserves that open and that gives me those crosses, I'm going to have an excellent entry point for the trade. I also can evaluate what the market's doing. I can take a look at it and I can see if this gap is preserved. Maybe it takes a day for this to trigger. Maybe it takes 2 days. I would like to see this gap preserved. For sure, the 444 level on the SPY right here, that was the previous high. I want that breakout preserved. So pulls back a little and bounces. I'm okay with that. So if I get the market and the stock behaving as I'd like, then I'm going to have a really nice trade on Home Depot. That's how I would be approaching it. It's how I'd be approaching day trades and swing trades differently using the same concepts. That's all I've got for you today. I'm going to do a video Sunday. We'll see you then, and hopefully Home Depot will give us something to take a look at. Thanks so much. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.